In today's video, we are going to be covering tax location and why it's a crucial component to your financial picture. Most people focus on what they invest in, but far fewer think about where they invest, and that can make a huge difference. It's called tax location, and it's one of the most overlooked ways to grow your wealth without taking on more risk. Today, we're breaking down exactly what it is, why it matters, and how to put it to work in your portfolio. First, let's simplify. Think of tax location like arranging furniture in a room. You're not gonna buy anything new. You're just putting things in the right places so that everything works better. There's three main types of accounts where your money can live. Taxable accounts. This is a brokerage account. Typically, these are either individual or joint. Tax deferred accounts. Typically, you have your traditional IRA and your 401k. Tax-free accounts. This is your Roth IRA, your Roth 401k. There are obviously many more accounts out there, but each one is taxed a little bit differently. So the key to tax location is putting the right investments in the right account so that you can keep more of your returns. So here's the idea. Some investments create a lot of taxable activity. This includes interest, dividends, capital gains, and others, they barely create any. So instead of throwing everything into every account, you match investments with the account type that minimizes taxes. Here are a few quick examples. Bonds often work well in tax-deferred accounts because they generate so much taxable income. Stocks, index funds, and ETFs often do well in taxable accounts such as your brokerage account. And this is because they're naturally tax efficient. High growth assets often work well in Roth accounts. And this is because the growth can come out completely tax-free. This is how you keep more of your return without changing your overall risk level. And here's what surprises most people. Tax location isn't about taking on more risk. It's about being strategic with the risk that you're already taking. You can have the exact same investments, but depending on where you place them, your after-tax return could be very different. And over 10, 20, or 30 years, that difference compounds. And like any strategy, tax location has its pros and cons. It can add years of additional income in retirement. It can increase your after-tax return without changing your investment. It helps reduce your tax drag over time, and it works alongside your long-term retirement plan. Some cons for tax location include the fact that it requires coordination across all of your accounts. Not every asset fits neatly into one bucket, and it can be really confusing without guidance or a clear plan. But when done correctly, it's one of the simplest ways to improve your long-term results. And when your investments are placed intentionally, you get more efficiency, more growth, and more money that stays in your pocket, not going to taxes. If you've never looked at the tax location of your portfolio, now's the perfect time to take a look at it. If you like videos like this and you would like to continue learning more, please consider liking and subscribing. Thank you for watching and take care.